You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast, coming to you from Montecito, California. The topic of today's show is essentially, why is oil still expensive despite clean energy, all that technology and stuff. But before that, I feel I need to talk a little bit about, kind of what's going on in this entire investment, personal investment podcast ecosystem and the investments that are going on with it. So let me back up a little bit. So a decade ago, I first started playing around with this podcast. I think it truly was like the first podcast I did was in 13, and then I stopped for a couple of years or something like that because no one was listening. But anyway, I wanted to do it because I was super excited about this whole new world of investing that I was learning about, and thinking to myself, well, why invest in stocks if you could invest in real estate, oil and gas, and other businesses? Seemed to make a lot more money, and maybe it had a lot less risk. And here I am a decade later, and I have matured quite a bit and gotten older. But a decade later, I can see why it often makes sense for people to just buy ETFs and call it a day, or maybe just get into one of these permanent life insurance things like the Wealth Accelerator, Wealth Formula Banking, that kind of stuff, because private investing can be very lucrative, and it has been for me and for a number of you, I know, but it's not regulated. So it does attract all kinds of nefarious activity and incompetent characters to the space, and particularly retail investors. And when I say retail investors, I mean like mom and pop, you and me, generally people who are not professionals, institutions in this space, living and breathing it. They tend to have less sophistication on this stuff, and that's not to say those investors are not intelligent. It's just hard to be a full-time physician or whatever you are, and a sophisticated investor at the same time. So that's why it gets a little dangerous, because then you put this interface with guys like me who are personal finance podcasters. Well, what are we trying to do? We're trying to find content, right? Like my goal in this, the very beginning, has been able to provide a different perspective, provide different options, a different way of looking at personal finance, right? Podcasters, for the most part, we see ourselves as providing education and entertainment, when in fact, what happens is we inadvertently can endorse individuals to whom we shouldn't be giving a platform, but we may not know that. And I have to admit, I've been guilty of this myself, especially early on. I'd interview anyone with an interesting idea. I'd be like, yeah, coffee? Oh, that sounds interesting. Let's do that. And then whiskey, whatever, let's do that. It's the problem with that, though, is that listeners sometimes take these interviews as a stamp of approval from me, which is not, right? I mean, a number of these things that I talk about, I have no interest in investing in myself. A good example of that being my vehement and over expressed sentiment for my dislike now of investing in oil and gas drilling, but that then, I gave a platform to people to talk about oil and gas who seemed reasonable, right? They seemed reasonable. And of course, again, the intent being what is it to invest in oil and gas, and what are the potential benefits? Because there are, and people should know that, right? There was this huge tax advantage, still is a huge tax advantage. But the problem is, in this oil and gas space, it's full, jam-packed full of, shysters, whatever you want to call them, fraudsters, criminals, all that. And, and there's been people who've been interviewed on this podcast that have lost people money. And I feel terrible for that. I apologize. But that's a real challenge as a podcaster. So, I have to tell you, luckily I haven't had too many things like that. I mean, and in this space, it's become crazy, right? In recent months, you've got retail investors in this space who've been hit really hard because of, some individuals going on podcasts and talking about what they're doing, and the next thing you know, there's people think that these are real opportunities and that they're legitimate. I've seen some of them myself. It's kind of shocking, frankly, to me that people would even think of investing in these things. But again, it is a trust element that happens when somebody goes on a podcast, and you have to be careful that you don't listen to podcasts and immediately make that a legitimization of the person who's on. Just to give an example, I mean, this in the last month or so, the SEC shut down multiple funds, carbon capture space, for example. There's one in cannabis, as I understand it, that appear to be based in some level of fraud. Now, I'm not saying that the people who were promoting them were necessarily, knew that they were fraud, but that's the problem in this space, right? You can't just go out and raise capital and promote something when you don't have the sophistication to go and vet it yourself, right? And then there's other ones that maybe they weren't fraud, but they simply collapsed. They just collapsed because poor business plans were never attainable in the first place. And if you look at those business plans, you're like, are you kidding me? You're seriously going to think this is going to work? Okay, anyway. Fortunately, again, our group was able to dodge these schemes. I never had any interest in interviewing these people or anything about these things. It's hard enough to invest out there without swimming with sharks, right? Case in point, my real estate portfolio, which I've made good money in real estate for a long time now. My real estate portfolio and my investor group portfolio, we have some losers right now. We're going to lose some money, right? Now, much of that is due to an unprecedented slope of rate hikes and unexpected price escalations, price of materials, property taxes, and insurance going off the chart. But one thing it's not fraud. And in investing, you can't always win. But if you avoid fraud, all you really need to do is win more than you lose. And we've had a long, long streak of big wins, right? And so expecting a loss once in a while is actually pretty realistic. But that being said, again, you lost not because somebody actively cheated you in a nefarious way or in a benign neglect sort of way where they didn't have any clue what they were doing, but because sometimes you don't make money when you invest. And that is something that nobody wants to say, but it's the truth. And at the end of the day, again, my own investments, the big picture, they're going to net out quite profitably. And I borrowed, and the reason for that, by the way, is because I've borrowed from the traditional investing paradigms in one way. I volume average. I have a lot of investments in a lot of different assets, even in, and that from what I've said before, most of them are real estate related. So net, I'm going to have some losses, but my gains are going to be a lot more than that. And that's fine. I've stuck to a plan for several years. Again, overcome some setbacks, and I will now, what I'm going to do now, I'm going to position myself to be opportunistic and to take advantage of oncoming distress. It's going to get ugly. I mean, it is going to get really ugly in the next few quarters here. And you know what's going to happen? Most people are not going to do anything. They're going to get too scared to take action, especially if they've suffered some losses in the down market. But I have to tell you, and I'm going to warn you over and over again, that's exactly when you want to be greedy, not afraid. Okay? I'm not, listen, at the end of the day, you do what you want to do, but I'm going to tell you that that's the situation we're going to be in. But going back to how we can, move forward, specifically in this community, in the safest way possible, we do need to be proactive in risk mitigation, especially when it comes to avoiding scams. And this is particularly important for things that are outside of real estate. Now, real estate is, to a certain degree, it's like, okay, you've got this great big asset there. You can look it up. You can walk it. You can drive it, whatever. It's on sale. So it's a little bit less important there. But when it comes to investing in businesses, when it comes to investing in, a number of other things, like, for example, our ATM fund, those things are a lot more difficult for people to understand what's going on. So what we're going to do, first of all, as far as the podcast goes, I've already kind of done this. You've probably noticed, but I'm not interviewing anyone who actively raises capital. There are cases when I'm personally involved in an operation and I have transparency, then great. If I have Dante Andrade on, and we're talking about real estate, Dante is my partner on Turo, and, we're going to talk about it. And it's, I'm not really worried that we're going to lead anybody astray. The other thing is our investor club, which, our accredited investor group is joined. You can join that on wealthformula.com, our investor club, but we're only going to present opportunities, in which I'm a managing partner, which has undergone due diligence by a third-party SEC-registered broker-dealer. And the reason for this is, again, we want to make sure that everything that we are potentially putting out there is vetted at a very high level. And in taking these steps, my podcast itself does become a little bit more challenging, right? As you've already noticed, again, we've shifted to more macro issues than investment-related topics. However, I also believe that the steps that we're taking with the podcast and with the Investor Club is really going to provide a next level sort of best-in-class retail experience, which I think is lacking in this space. It is the wild, wild west in this space right now. But what we're going to do is we're going to have institutional level due diligence on everything we provide. And that's just not available to retail investors for the most part. Anyway, it's going to be more complicated. It's going to be more challenging to execute, but you deserve it. I deserve it. We need to be able to, win and lose based on our investments and not worry about, everything else. Now, getting back to this week's episode of Wealth Formula Podcast, we're going to talk about oil and alternative energy sources. Now, this is a topic that I just mentioned. I'm very skittish in talking about it, but in this case, we're going to talk about it at the macro level. We're going to talk about it not as an oil drilling opportunity, but something that is something that we need to know about, because oil and alternative energy sources are a critical part of our financial system. So it's information you're going to need to understand, again, the larger global financial picture, and we're going to have a great interview with an expert in this space when we come back. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Alex Stevens. Alex is a manager of policy and communication for the Institute for Energy Research. He writes on the relationship between business and government in the energy industry, as well as the effects of regulation and subsidies on energy markets. Alex, welcome to the show.
Great to be here. Thank you for having me.
So, this is obviously this stuff gets pretty complex. And so I want to kind of talk a little, go back to kind of where we are right now. There is this, obviously in recent years, a real push towards green and alternative energies and all that kind of thing. But we still are largely an oil and gas, maybe not largely, but we are an oil and gas based global economy, right? Still. And I'm wondering why, where we are in that balance and what you see as potentially, some of the tipping points that might happen.
Yeah, so just to give sort of the lay of the land, globally, we get the largest amount of our energy from oil, followed by coal, and then natural gas, sort of in that order. And in terms of a percentage, about 80% of the world's energy consumption comes from those three resources. And here in the U.S., we pretty closely mirror the global percentage. It's about 79% here in the U.S. That comes from those three sources. And then just to give you an idea of kind of how that number has changed over time, if you go back to 1988, the global market share of fossil fuels was about 88% of total energy consumption. So it's come down a little bit, but the reason I chose 1988 is really that's the year that climate change kind of entered the policy discussions. So, the point being that, after decades of climate debate, policy debates, treaties, subsidies, mandates, all sorts of things. We still largely live in a world that's powered by fossil fuels.
Well, and beyond that, I wonder on that statistic you said going from, what was it, 88 to 80%, the absolute amount of energy that it's coming from fossil fuels, et cetera, has probably gone up.
Right. Yeah. So the market has grown. So, obviously we're consuming more fossil fuels, even though that percentage has come down.
So, I guess one of the questions I have is if multiple countries, including the U.S., claim they want to go to green, what's the issue? Why isn't what's slowing the process down?
Well, it's a good question. So the answer is probably twofold. Why we're not going into this like green revolution. The first is that it's incredibly costly, despite everything that's been made about how much renewable energy has come down in price in recent years. The fact of the matter is, wind and solar energy are still very costly. And the reason for that is that when you take into account the costs of resources imposed on the entire electrical grid, the entire system, because they're not dispatchable, they end up actually increasing electricity prices. And that's because you end up having to pay not just for the wind and solar resources, but then also the natural gas plants and nuclear plants that have to back them up when those resources aren't available. So when the sun isn't shining or the wind isn't blowing, we demand electricity, 24/7. So you can't just have a system where you only have those resources. So you end up paying for almost double the system.
Well, let me ask you this in terms of, just looking at this again on more of a global basis, how does a policy, whatever policies we have right now in terms of, green energy and that kind of thing, how does it differ from like China, for example?
Yeah, so I'm not an expert on Chinese energy policy, but what I can say is that there's similarities and there's some differences. So in 2020, China's President Xi Jinping said that his country would their goal would be to for their carbon emissions to reach their highest point before 2030, and then they'd reach carbon neutrality by 2060. The country's new coal-fired generating capacity, however, represents about 6 times the amount of total coal-fired capacity added over the past 5 years of the rest of the world. So it's sort of like they're saying that they're going to set these goals, and but what they're actually doing is adding a ton of coal-fired power plants. So I guess what I would say about China is that, like a lot of other countries, their government has set very lofty decarbonization goals pretty far out in the future, but their actions seem to point in a different direction. As last year they added it was over 100 gigawatts of coal-fired capacity. So how does China's green policy differ from the U.S.? I would say, basically it appears that they are saying that they're going to do these things, but they're not actually stupid enough to pursue them. They're still relying on fossil fuel energy.
Yeah. So what I'm getting from you is essentially that, okay, yeah, the green stuff, it's sounds good in theory, but right now, what drives ultimately all of this is what it costs. And if it was truly cheaper, we'd probably be going in that direction, but it's not. Is that fair?
Yeah, I think that's fair. Obviously there's a lot of subsidies and mandates that sort of drive the renewable energy market. There's no doubt that the costs of onshore wind and solar energy have come down a lot since the investment tax credit for solar and the production tax credit for wind were put in place in 1992. But those tax credits have been extended 13 times since then, and they keep getting extended even though these industries claim that they can be competitive without them. But whenever those tax credits come up for review, obviously those industries are kind of there behind the scenes saying, no, we need to keep these in place. So,
well, and it's tricky too, because in reality, it doesn't necessarily seem to make a whole lot of sense economically right now. But then even today, or I don't know if it was today, but recently, the EPA story just breaking about combustion engine emissions. It sounds like basically the government's trying to end gas cars via regulation. So can you talk a little bit about that? Because that sounds like it's relatively new news, and I'm sure you're all over it.
Yeah, so I don't have the complete details of exactly what the EPA released earlier this week. I know some of my colleagues here at IER have been working on it, and we have a few blog posts on it. So I would encourage your listeners to go to our website and check it out. What I would say is that it's obvious that what the administration wants to do is encourage people to buy electric vehicles. And the changes to the tailpipe emissions rule are just, one small piece of what they're trying to do there. I think when you look at sort of some of the surveys that have come out recently about how consumers feel about electric vehicles, I'm hesitant to say that, we're definitely moving in this really quick transition to electric vehicles. Gallup had a report that came out this week that shows that only 12% of Americans are seriously considering buying an electric vehicle. On the other hand, 43% said they might consider buying one sometime in the future, but 41% unequivocally said they're not interested in electric vehicles. So that's probably not great news to Ford, who recently lost, $3 billion in their EV sales this year. And, most of the reports that I've seen, it's still people citing the high costs for electric vehicles and then the problems with the lack of charging infrastructure as being the main concerns there. And I think that sort of makes a lot of sense. I think the average cost of electric vehicle, the upfront cost is like over $65,000 or $66,000 right now. So I want to be clear, I'm not against electric vehicles, per se. I just don't think the government should be handing out subsidies to people who want to buy them. The majority of electric vehicle owners are high earners. In a lot of cases, it's their second or third car. So I'm opposed to the government handing out subsidies to people who are wealthy and for things that are basically kind of play toys for the rich. But so if you want an electric vehicle, you're free to buy one. But I think the government's probably making a mistake here, trying to encourage everyone into that market very quickly. So
yeah, I think it's a complicated thing. I think also because I'm certainly no expert on this, but when even talking about like a lot of these electrical vehicles, the amount of fossil fuel energy that goes into producing them is significant. So it seems like, okay, well, then what exactly are you subsidizing?
Right. Yeah. So, when you think about electric vehicles, how green they actually are, you have to take into account, exactly the grid that it's being charged off of, what sort of resources are being used to power that grid. So if it's being powered by coal energy, not so green. And, there's obviously some issues environmentally with the way, with what gets put into the batteries. Obviously, it's a lot of lithium mining. A lot of this goes on in countries that don't have the greatest environmental records, especially China. So I think people are becoming a little bit more skeptical of, well, really just how green actually are these things like renewable energy and electric vehicles at the end of the day. I think that skepticism is warranted.
I'm curious how some of the public oil companies, like Exxon, BP, how are they responding to some of the pressures? Obviously they've outperformed most asset classes over the last 2 years. Are you seeing anything? I think towards pushing towards any sort of green initiatives on their end.
Well, so obviously some of the European companies have sort of adopted more of a green energy posture, and thinking BP and Shell have moved more in that direction. I think Exxon and Chevron and some of these companies haven't been quite as eager to do that. I think the energy companies are in a very tough position where they're responsible for producing energy for basically our entire economy. And they've sort of been put in this position where I don't want to say everyone should be necessarily like grateful for that, but obviously there's this cultural movement that, really is trying to demonize these companies in ways that doesn't completely appreciate exactly, the extent to which, the products that they produce obviously greatly increase their standard of living, not just in terms of energy and electricity and things, but obviously, all of our plastic products are petroleum based. Natural gas is used as a feedstock to create fertilizer. So, their products have impact on our food supply. Coal is used to create concrete. So, really every part of our economy is touched by the products that these companies make and produce. So they're definitely in a tough position where they're being demonized, but really, our high standards of living, the products that they produce, are really responsible for how well, human beings, especially in the United States, live. So
yeah, I mean that's the irony of it all, right? Is that, the oil and gas industry, as much as they're demonized now, we really owe modern civilization to that. You wouldn't have had the industrial revolution. You wouldn't have had any number of things happening without this kind of energy driving the whole thing. So we talk about like the U.S. and China, but there's the rest of the world too. And there's the rest of the world. Is there really? The Middle East, et cetera. Is there any push for them to go green, or are they just like, okay, you guys do what you want to do? We're gonna, we've got oil and gas here, and we're doing just fine.
Well, I think what you see with a lot of governments is they make these commitments that are very far off in the future, and especially in democracies where people aren't in power for very necessarily for very long, they're able to commit to things that are far off in the future, and then they won't be around necessarily when the bill comes due. So it's been pretty common for governments sort of all over the world to sort of make vague commitments towards going green and committing to renewable energy and electric vehicles and these things. But to the extent they're actually willing to do that, it's kind of up in the air. I think if you look at Europe right now, they're very far along actually in the process. They've made these commitments and then actually have pursued them. And you're seeing right now with the energy crisis in Europe, which there's sort of a narrative out there that this whole thing has been caused by the war in Ukraine. That's obviously exacerbated the energy problems in Europe. But those problems were starting well before the war happened. And the energy crisis is due to the policy decisions that have been made there. Most notably, they've retired a lot of coal and nuclear generation in Germany, especially, but a lot of countries have been retiring their sort of baseload energy plants and replacing it with renewable energy sources. And it's for the reasons that I sort of explained earlier, that's playing a big role in the huge, basically, cost of living crisis that you're seeing in Europe right now.
I'm curious what you think drives government policymakers towards renewables specifically, as opposed to, a broader perspective like oil, wind, nuclear, as you mentioned. Why just renewables? Why is there a focus on that?
Well, I think if you look at the actual energy policy space, there are subsidies for really just about every source. So everything gets subsidized and everything gets regulated. So it all really doesn't kind of make sense. But there's no doubt that the renewable energy sources receive the lion's share of subsidies and mandates and things here in the U.S. Why they specifically choose renewable energy, I don't know. It's been sort of a common theme for people to sort of, fantasize about a transition away from fossil fuels for a very long time. And I have a book on my desk right now that was published in the 1970s that was trying to project the future of energy and everything. And even back then, they were saying, well, it's obvious that solar energy, these renewable sources, are the future, and it's only a matter of time to make this happen. So why they're specifically fixated on those sources, I honestly couldn't tell you, but it's definitely interesting and sort of at odds for what is in the best interests of people and people's standard of living.
There's been, you mentioned specifically about nuclear, about, Germany closing plants and all that. There seems to be a little bit of a renewed interest, though, right, in nuclear across the board. Can you talk a little bit about that? Because I know, it's probably, as scary as nuclear is to, I think, a lot of people, it's probably the most cleanest and most efficient way of getting energy. So what kind of movement are we seeing on that?
Yeah, so there's definitely been a shift in policy circles towards a new emphasis on nuclear energy. There are problems with nuclear, though. They have very high upfront costs. So nuclear is very expensive. The degree to which that regulation is responsible for that is probably playing a big role there. So, nuclear is a great technology. It doesn't produce carbon, very minimal environmental impacts and things. But there's sort of this problem where technologies that are born in sort of government captivity, like nuclear was, through the obviously sort of the atomic bomb program and stuff. When technologies are sort of born under control of government, it's very difficult for people in those industries and obviously the policymakers that sort of surround it to take a step back and say, the government really needs to take a step back and kind of take a hands-off role with this technology. So, I'm certainly in favor of basically decriminalizing nuclear and trying to move barriers to nuclear out of the way. I am a little pessimistic, though, because I think there's sort of a culture within that industry that has sort of always been comfortable being a part of government, playing along with the agencies that regulate them. So it's going to be very difficult for nuclear energy advocates to sort of decouple that relationship. But I would support efforts to do that, and there is certainly a movement amongst policymakers to try to make that happen.
One of the things I think is a challenge, even in the U.S., regardless of where you are on this, whether you really want to pushing for green or you're not, is that, from administration to administration, they're going to have very different policies on this. So the Biden administration might have a strong push towards renewables and green energy. And then the next thing you have a Republican administration that comes in who really has no interest in this. And so it makes it very, I think it makes it very challenging when there's not a consensus amongst politicians and amongst even people in the country about which way to move.
Yeah, definitely. I think in general with energy policy discussions, I think there's a cultural problem where everyone is looking towards Washington, D.C. for, how are we going to drive innovation? How are we going to, change these industries and things? I think that's really unhealthy because I don't think politicians and policymakers necessarily have the best incentives to be able to identify, what the future of technology is going to be. And they definitely don't have the knowledge and incentives to sort of guide that technology along. That's what the private sector is so good at doing. So, I personally would really like to see a shift away from energy policy discussions being about, well, what type of energy are we going to support? Who are we going to subsidize? Who are we going to regulate? And a shift back to a culture of sort of free enterprise that says, no, we're going to eliminate barriers to enter energy markets. We're going to let everyone compete, and we're going to see what customers and consumers prefer, whether it be in terms of where they get their energy from or what type of vehicles they want to buy. And I think that the business community really needs to play a role in making that shift from not looking towards Washington to tell them what sort of products to make, but to rediscover, I guess, sort of the culture of free enterprise that has made America great and has really driven innovation and the sort of things that we're looking for the future of energy.
What is in your opinion, I mean, you're obviously knee deep in this stuff every day. What do you think is going to happen over the next decade? Do you think I'm not asking you to look at a crystal ball, but I mean, obviously you've got some data, you see trends. Do you see much changing over the next decade?
Yeah. So if you try to project forward a little bit, if you look at the EIA's energy outlook for this year for 2023, they project that in 2025, oil, natural gas, and coal are still going to make up the majority of U.S. energy consumption in 2050.
2050.
Yeah.
Okay, yeah.
Yeah, and they expect that number to be around like 65%. So coming down, their projections have historically been pretty good. Sometimes they make mistakes. So despite what people are saying, this overnight energy transformation, even the government agencies are saying, this isn't going to happen overnight. In 2050, 65% of our energy consumption is still going to come from oil, coal, and natural gas. So, what's going to happen in the next maybe 10 years? I think people are, one, waking up to the fact that, government isn't very good at driving innovation, that we're spending tons of money subsidizing huge companies that, quite frankly, don't deserve to be subsidized in the name of trying to drive innovation, trying to drive change and progress in the energy sector. And I think people are going to become a little bit disillusioned, a little bit burnt out with the idea of government playing the lead role in all this. And hopefully people sort of wake up to that and say, no, we need to get back to a world where companies are focused on providing things for the consumer and what consumers want. And in a competitive marketplace, that sort of driving the innovation rather than looking to Washington, D.C. to do it.
Good stuff, Alex. Very interesting. Where can we learn more about what you're doing?
Yeah, so you can find my work and my colleagues' work at instituteforenergyresearch.org. We're a free market think tank based in Washington, D.C. here. We have a blog where we publish 1 or 2 articles every single day, usually just daily news stories about energy. We have a newsletter called In the Pipeline, which is sort of a energy news roundup. And then we have a couple of podcasts as well. I host a podcast called Plugged In, where I talk to politicians, policymakers, journalists, people from the industry. And you can find all of that work at instituteforenergyresearch.org.
Fantastic. Thanks, Alex, for being on Wealth Formula Podcast.
Thank you so much for having me. It's been fun.
We'll be right back. Welcome back to the show. Hope you enjoyed it. And going back to initial discussion of what we were talking about with regard to Investor Club, I want to also point out, if you, first of all, if you're not in our Investor Club and you are an accredited investor, which means you make $200,000 per year or more, $300,000 per year filing jointly with a reasonable expectation of continuing to do so in the future, or you have a net worth of $1 million or more outside your personal residence, then you are an accredited investor, and you could join Investor Club at wealthformula.com. There's going to be additional, the additional part of that is not part of that, but is a separate thing. If you're interested in getting onboarded by the broker-dealer that we've been discussing, that we're working with, definitely reach out to Dana or me, Dana at wealthformula.com, or, Buck at wealthformula.com. We'll get you onboarded. Lots of great potential opportunities coming down the pipeline here. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.